This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. Today we're going to be looking at the data sets for the week of December 22nd, 2025, and happy holidays and Merry Christmas to you all. And we will also be doing a quick technical analysis over the SPY. Now, just very briefly, I am kind of changing up how I'm doing my videos for a little bit. If you like this new format, let me know. If you like the older format, let me know as well. Thank you. And getting into this week's data, on Monday we have the PCE data, the data I was expecting last week. This comes out at 10 a.m. on Monday, and also the personal spending. Both of those are going to be very, very crucial data sets. I do anticipate the PCE coming in lower, and I do expect the personal spending to come in at neutral or basically the exact same or lower. Now for Tuesday is a big day, but the main data sets we're looking at is the GDP quarter over quarter at 8:30 a.m. and including the GDP price index. Now there's some other data sets in there like the core PCE prices, durable goods. There is the ADP employment change at 8:30. I'm not super focused on those. Pretty much everything for Tuesday is going to be that quarter over quarter GDP. And then the CB consumer confidence at 10 a.m. That one's going to be a very, very critical data set. The last reading was very poor. It was an 88.7. They're expecting it to jump up to 91.7. I highly expect it to be basically neutral or come in much lower than the 88.7. We have the 5-year note auction at 1 p.m. Um, I do really anticipate the yields to start pulling down, especially now that the Bank of Japan raised their rates and we reduced ours. So, that would mean that the short end of the curve would eventually start to pull down. Now, that's the main thing I'm looking at for Tuesday. Again, there are some other data sets. There's the new home sales. I'm not too concerned about that at this moment, unless there's something major said about those. Now, on Wednesday, we will be having the market close early. It closes at 1 p.m., so just be mindful of that. We have the jobless claims, both the initial and continuing, at 8:30 a.m. That will be important because basically whatever Tuesday's data gives us, these jobless claims will be showing a true reflection of kind of where the market or where the labor market has been. And that's been very, very contentious just over the last month and a half ever since the data sets have been coming back out. Now, Thursday, the market is closed for Christmas, and Merry Christmas, everyone. Happy holidays. I hope you spend plenty of time with your friends and family and do all sorts of fun things. Friday, we don't have any data other than the Baker Hughes stuff, but we're not really focused on that. There are no major earnings for this week, just to let everybody know.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And getting into the technical analysis, as always, let's make sure our daily time frame is turned on and make sure your moving averages and Bollinger Bands are turned on. So we closed on Friday at 680.59. The 5 mile is currently at 676.02. I expect it pulling a lot closer to that 679. I have it marked out at the 678.80. This definitely can be higher than that. It can be lower. Make sure you mark it on open. It's very, very crucial. We have the 10 mile currently at the 679.52 and the 20 mile at 677.84. So we are now seeing very heavy consolidation of these moving averages. The 5 mile will basically be slightly above the 20 mile, but right at or below the 10 mile. So heavily consolidated moving averages. And we also have the upper Bollinger at 691.82. So it has been curving downward slightly, and I will discuss that downward curve in a second. And we have the lower Bollinger at 663.86. And again, that has been curving upward. Now, when we have the Bollingers curve inward, that means that there is consolidating going on within the 20 MA. That consolidation is telling us that a very large move is getting ready to occur. Every time we see that consolidation, we see the moving averages pull in. That's when we get a very large move. Moving averages pull in, or the Bollingers pull in, very large move. Um, you can go back to almost any chart, and that example will hold fairly true. With that said, we've been sticking to a very, very heavily consolidated market for the last week and a half. We were at that 5 mile range. We rejected it down to that 20 mile range. So far, rejected that 20 mile range back upward, testing the 5 mile again, and now we're just all on top of each other. What does this mean? This means that the market needs more data to make the move it's going to make. So either Monday's data or Tuesday's data, very likely that data on Tuesday, the quarter over quarter GDP, really spells the entire story of whether we're in a recession or not. So I'm sure the market is very, very in tune for that data set. With that said, we have lower volume this week. So with lower volume, generally the market will see buying to the upside. Again, people aren't in the office. You won't be having the massive, massive buys. You won't be having the massive, massive sells. Generally, people are just going to be slowly putting, um, you know, some funds into the market. Active managers are going to be having, their machines just slowly actively buying upward. Usually happens almost every single holiday, and that's a large reason why we do have these Santa rallies and these large holiday rallies is because everybody's out of the office. It's easy to just turn the algorithms on, allow the buying to the upside, and then you can control the market and do whatever you want to do. With that said, we're going to be around this 680 range. Okay. That means that we do have a full $12 upside to the upper Bollinger, and for the downside, we have closer to 15, $17, give or take. Now, if we do get the upper or lower Bollinger move, I will explain the mechanics in that video. But so far, this is again very, very good straddle range, and I've been saying this each time we get to the 20 mile. Once you're at that 20 mile range, that's when you straddle because that's when you can get to the upper Bollinger or down to the lower Bollinger. This consolidation generally won't last too long. We've been consolidating now again for about a week and a half, so it is time for the market to move. We have tested the 20 mile. We have basically tested the 50 mile, even though that's not a level I look towards testing. That's a long-term trend. We have all of the moving averages above it. So if we see buying to the upside, all of these moving averages are going to pull upward. And going over just structure very, very quickly, we are above the consolidation channel. And I mentioned on Friday how if we did not have massive selling to the downside, that this would be an extremely likely bounce to the upside. Now, currently, the upside is filling this cup out. And that cup goes again all the way back up to the 688. Now, we did have that cup complete in here. It did complete in the overnight, so or in the after hours, so I don't know if the market really wants to count that. But technically, we do have a completed cup. We do have what looks to be a handle that is so far building support. And from that handle, that's how you get new all-time highs. So when I'm saying straddle this range, that's so that you can get to those all-time highs. I say, you know, position about 1 to 3 months out. That's so you can really capture this movement. If this is going to be the massive bull structure that we've been talking about for a very long time, then this is going to take us very well into the 720s. Okay. Now, again, we do have some very crucial data this week. If that data does not come in poor, then I heavily expect the market to be buying upward. Um, what you have to look for on the downside is again breaking under this upper consolidation channel. That would be a very strong sign that we could be selling off. You're going to want to be looking at the actual 5 mile range. If that 5 mile range is being pushed below and you're seeing the VVIX moving upward during that time, then that's a very good signal that they want to push lower. To break this line, to break this buying channel, and to get back into this major consolidation range, we're going to need a very bad data set to basically say that, you know, the buying to the upside is no longer worth it. Now they have to consider the downside risk. With the GDP data this week, that could be that type of data set. We'll see. I don't really have any opinions about that. I do know that the GDP has been very low other than last print. Last print was higher due to the fact that, again, we had the imports come in much weaker because of the tariffs, and that heavily skewed the GDP quarter over quarter to the upside, showing that we had a very large GDP when we really shouldn't have. Um, I don't really care about my opinions. I'm willing to be wrong about that. So I really do want to see the GDP prints. It's very important data. Other than those straddles, you can target this upside cup handle. Again, that's going to take you all the way to the 691. So if you're bullish, if you believe in this cup handle, if you see the upside, then buying calls almost at open is going to take to that upside. You just have to get enough time duration in them. I would heavily suggest at least getting them out till Friday if you're going to try to target that upside cup, but it should be a very nice move. The upside cup is almost a full $10 move, even though, again, that won't be the upper Bollinger move. Once we start pushing back upward, the upper Bollinger will be opening to the upside. But yeah, that's going to be the market analysis for now. Um, I'm really not seeing anything different to suggest otherwise. So far, we're building really nice structure on the hourly. We have an inverse head and shoulders right here. And that inverse head and shoulders so far has broken us directly out of the upper range of this support channel. So that looks very good for a bounce to the upside. Start filling some of this upside selling weight, and we can hit all-time highs extremely quickly. That's the framework we're going to be using for now, expecting that upside unless we see data breaking us to that downside. Um, if that does happen, then again, we will reassess things as, conditions change. Thank you all for watching. I appreciate it, and I hope everyone has a very great Christmas.